Why? DeFi, AI and the rise of machine-native finance. Flint West reporting. Summary statement. Machine-native finance transforms the search for the best-performing asset from a human analytical process into an autonomous engineering problem, positioning AI as the architect of optimal financial structures and DeFi as the engine of deterministic execution. Pinpoint brief. For as long as finance has existed, the objective has never really changed. Find the best asset. Sometimes that's gold, sometimes it's stocks, sometimes it's bonds, sometimes it's an index, sometimes it's a basket of assets. The objective is simply to discover the best performing asset within a given optimization objective. For centuries, we've relied on human beings to do that job. We read reports, we study charts, we build models, we argue on television, we make our best guess. But here's the problem. Humans are slow. We're limited by the number of opportunities we can analyze, the number of variables we can keep in our heads, and the speed at which we can react. Traditional finance reflects those limitations. Markets open, markets close. Settlement takes time. Intermediaries sit between buyers and sellers. Products are designed manually. Everything is built around the human operating system. Artificial intelligence changes that completely. An AI doesn't care whether it's Tuesday afternoon or 3 o'clock on a Sunday morning. It doesn't care whether it's looking at 10 assets or 10 million. It doesn't get tired. It doesn't need sleep. Most importantly, it doesn't have to think like a human analyst. Instead of asking, should I buy Bitcoin or gold, an intelligent system asks a much bigger question. Out of every possible financial structure that satisfies my objective, which performs best? That's a completely different problem. It isn't an investing problem anymore. It's an engineering problem. Now something else has to happen. Before AI can search, everything has to become machine readable. That's where tokenization comes in. People often think tokenization is about putting assets on a blockchain. That's only part of the story. Its real value is that it converts financial assets into standardized programmable objects that software can understand. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. Once that happens, something remarkable occurs. A single asset, a basket, an index, a dynamically rebalanced strategy, a synthetic financial product. To an AI, they're all just financial objects. A gold USD Bitcoin basket is a perfect example. To a human, it's 3 separate assets managed together. To a machine, it's simply another financial object with measurable characteristics. It doesn't care what's inside. It cares how it behaves. How does it perform? How volatile is it? How does it respond under stress? Does it satisfy the optimization objective better than everything else in the search space? That's what matters. Now imagine doing that. Not with 10 portfolios, not with 100, not with 1,000, but with millions. Eventually, billions. That's what computational finance looks like. Discovery, however, is only half the equation. Once AI discovers a superior financial architecture, something has to execute it. That's where DeFi enters the picture. This is why I think so many people misunderstand decentralized finance. They think its greatest innovation is decentralization. I don't. The true value of DeFi is not decentralization. It is machine-native finance. Smart contracts execute exactly as written. Blockchains settle continuously. Markets don't close for the weekend. Software doesn't need permission to participate. The financial system becomes programmable. That's the breakthrough. AI discovers, DeFi executes. Together, they create something traditional finance was never designed to support. Machine speed capital allocation. Does that mean traditional finance disappears? No. There will always be places where human judgment, legal discretion, regulation, and institutional governance remain essential. But if AI consistently proves better at discovering optimal financial structures, then the cost of forcing those systems to operate inside infrastructure designed for human limitations will continue to rise. That's the real pressure, not ideology, economics. Viewed this way, DeFi isn't simply another version of banking. It isn't just about cryptocurrencies. It isn't even primarily about decentralization. It's the execution layer of computational finance. Tokenization provides the representation layer. AI performs financial discovery. DeFi executes financial logic. Blockchain provides deterministic settlement. Put those pieces together, and finance begins to change. The future may not belong to the investor who picks the best asset. It may belong to the intelligent system that continuously engineers the best financial architecture. Flint West signing off.